Warren Buffett and Charlie Munger are one of the most prolific pairs in the world of finance and in the stock market. I'm going to talk about what happens when they're no longer here. Yes, I know it's hard to imagine legends such as themselves no longer being here on this earth, but they did address this issue in their latest shareholder letter. We're also going to talk about coronavirus fears, how this is impacting the stock market. Is the sky falling? Do we need to worry? You're going to get all of that and more coming up. Yes, guys, so Warren Buffett and Charlie Munger are probably the most famous faces in the world of finance and in the stock market. But what happens when they're no longer here? What happens to their massive fortunes? And what kind of legacy do they leave behind as a result of that? We're going to get into that. Also, talking about the coronavirus fears, how this is going to impact your portfolio, you in the stock market. How should you be reacting at this point in time? Should you be worried? We're going to get all to that in a second. But first, I want to welcome you to this channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to see more content such as this, please hit that subscribe button, hit that notification bell, and give me a good thumbs up if you get some value out of this video today. All right, so it's probably pretty important to give some context to who Warren Buffett is and just how impactful he is to the world of finance and the stock market, as well as Charlie Munger, his right-hand man. So Warren Buffett is the CEO and chairman of Berkshire Hathaway, which is headquartered in Omaha, Nebraska. They're a holdings company who wholly owns the likes of Geico, Duracell, Dairy Queen, Fruit of the Loom, Long & Foster, and many others, but they also are the second largest shareholder for Apple and many other long-term investments. They've been able to build their portfolio over decades of investing, and they are known as one of the best investing firms of all time. Berkshire's net worth is estimated to be around $530 billion, making it into the 8th largest publicly traded company in the world. Buffett, who's 89 years old, and Charlie Munger, again his right-hand man, is 96 years old. And for those two guys to be as mentally sound as they are at their age is truly incredible in and of itself. And that people are still taking their advice even at their age is really incredible and really something to look up to. We all can only hope that we end up having lives as fulfilled as Warren and Charlie. So a lot of people obviously had causes for concern, for what happens to their investments after Charlie and Warren pass away. Fortunately, Munger and Warren were brave enough to acknowledge their own mortality and have now set in a place of contingency. It's always been there, but they wanted to make it more known, obviously, because this is becoming more of a topic of discussion given their age. Again, Charlie Munger is 96 years old, guys. It's really crazy to think about. Well, it's important to note that Buffett is a notable philanthropist, having pledged to give away 99% of his fortune in philanthropic causes via the Bill and Melinda Gates Foundation and many other charities that are going to help underprivileged children and youth, and really just giving it all away. Buffett's, whose overall net worth is estimated to be around $90.2 billion, 99% of his net worth is actually in Berkshire Hathaway, and quoted in a recent shareholder as saying that today my will specifically directs its executors as well as trustees who will succeed in them administering my estate after the will is closed not to sell any Berkshire shares. Over several years, Buffett's stock will gradually be converted and deployed for charitable efforts. In all, says Buffett, I estimate that it will take 12 to 15 years for the entirety of the Berkshire Hathaway shares I hold at my death to move into the market. He goes on to say that my directive will deliver substantially greater resources to society and would result as a conventional source of action. Now, in my opinion, I think this is absolutely awesome. 99% of Warren Buffett's overall wealth is going to be going to charity. 99% of that. Now, I know that 1% of billions and billions of dollars is still a ton of money, but think about the kind of cash that's going to be going into the economy, into the markets, and into underprivileged areas where people are going to be able to take advantage of that because of the legacy that Warren has left behind. In my opinion, Warren Buffett is one of those men that we should all aspire to be. Living the American dream, and what it truly means, in my opinion, is doing exactly what Warren and Charlie have done. They never left Omaha, Nebraska. They've been able to invest and save money like crazy and been able to build this giant empire, and they could have done a lot with it for selfish reasons. But ultimately, they were able to build this absolute giant and become the 8th largest trading company in the world, all to just give it away. Now, that's not to say that Berkshire Hathaway is going away anytime soon, and they do have successors that are in their corner that will be replacing them and practicing the same type of investment strategies as Warren and Charlie are doing currently and have done over the last several decades. So there's nothing to worry about there. But I think it's just absolutely incredible to be able to say that you did something as impactful as creating this Berkshire Hathaway company and billions of dollars that you're just going to be giving away to people who are in need and people who need this more than you do. So that's my opinion on that. So now we're going to be moving over to the coronavirus and how this is impacting the stock market. Currently, the Dow is down 800 points on issues of coronavirus. Unexpected surge of confirmed infections impacting global supply chain. Gold and metals are up considerably as expected. We're looking at Apple announced 2 weeks ago that they were expecting this to impact their revenues in the coming quarter. Nvidia expects to miss revenues by as much as $100 million in the first quarter. And so in my opinion, what we're seeing right now is just a reaction based off of fear. It's a short-term reaction. And since we talked about Warren Buffett today, he was actually asked about the coronavirus fears and how this is impacting the stock market. And I thought what he had to say was absolutely incredible, and I didn't want to steal his words. He's quoted as saying, "We are a net buyer of stocks over time. Most people are savers. They should want the market to go down. They should want to buy at a lower price." Regarding coronavirus specifically, Buffett made clear that he is not a specialist, and he warned that a very significant percentage of our business one way are affected. However, he reiterated that investors should be more focused on the long term and not the short term. He's quoted as saying, "If you're buying a business, and that's what stocks are, you're going to own it for 10 to 20 years. The real question is, has the 10 or 20-year outlook on American businesses changed in the last 24 to 48 hours? And in my opinion, it hasn't. So for those of you who are worried about this impacting your investing and all that good stuff, I wouldn't be selling a dime of anything that you're holding long term. If it were me, I know that I'm not going to be doing that. And if you're looking at this from a 10, 20-year perspective, you got nothing to worry about other than looking for areas to be able to buy at a lower price. So if you have cash that is set aside, as you should be doing, you should be setting cash aside to be able to buy on opportunities such as this to be able to continue to grow your portfolio. Now, I had a lot of people ask me about whether or not this is going to be a recession. And at this point, I would say no. I don't think we're anywhere near a recession at this point. I think it's just a short-term correction, and maybe we end up having a little bit of an off year in 2020 as a result of some of the production that slowed down in the first quarter right now. But in my opinion, history has told us that we have recovered from this and actually end up doing quite well over the course of even the year, which we had issues such as coronavirus in the past. So the appropriate thing to do as a sound and smart investor is just to sit back, relax, and wait for the great opportune time to buy, because that is really what's going to get you ahead of everybody else instead of reacting on the fear of others. Okay, so now that you have all of that information as it relates to Warren Buffett and to the stock market overall as it relates to the coronavirus, I now want to hear from you. So make sure that you're leaving some comments down below as I answer all of them and I reply to every single one. So make sure that you're doing that. Ask me questions, leave me a comment. Do you like this video? Do you agree with me about Warren? Do you agree with me about the coronavirus fears? I want to hear from you. So make sure you're leaving those comments below. Speaking of comments, I thought that somebody asked a really great question as it related to the E-Trade buyout last week, and I wanted to make sure that I was addressing that today. So Lewis asked last week, so what will happen to my account? Any ideas as it relates to his E-Trade account being bought out by Morgan Stanley? Well, nothing should be happening to your account directly. I would say that maybe there's going to be some small changes down the road, but your money's not going to disappear. There's not going to be any issues as far as that's concerned. I've already expressed what I thought might happen to the company as a whole and how that might impact the entire market as far as online trading platforms go, but your overall account should not change. So nothing to worry about there, but I would actually end up calling them if you are concerned about that to make sure that there isn't any kind of major changes that you should be expecting or worried about in the near future. The only thing that you may expect to change is perhaps maybe the name ends up changing, or maybe there's some small administrative changes that take place. I would imagine that they use this opportunity to invest in E-Trade even more, to be more competitive and to be just a better platform overall. My hope is that actually does end up happening. A lot of times it ends up going in the other direction and doesn't do so well. Hopefully that isn't the case for E-Trade, and that this actually does end up improving the platform overall. So I hope that helps you, Lewis. And if you guys have any other questions, again, like I said, please leave the comments down below. I answer all of them, and I would love to hear from you. Lastly, I want you to check out the membership for Own the Chaos. If you want to join the Own the Chaos crew, click the join button over on my channel, and you get to have a live Q&A session with me once a week. You also get other really cool perks such as daily watch lists. You get to watch exactly what I'm watching throughout the entire day, and as well as some really cool badges, and ultimately it ends up supporting this channel. So if you would like to give me that additional support, I certainly would appreciate it by clicking that join button. And that's going to do it for me, folks. Thank you so much for tuning in. Please make sure that you're clicking that subscribe button and hitting the notification bell. And if you like today's video, give me that good old thumbs up. And as always, folks, I will see you all before the bell, and B. Smith is out. That they would not be raising capital in the form of an offering or otherwise because they felt they were doing well enough that they didn't need any additional money. But then he went ahead and put out a $2 billion offering, which begs us all to question, why did you lie to us, bro?